Welcome to the deep dive. Today, we're going to be looking into Australian businesses and their impact on the economy, specifically how they contribute through taxes. We've got some reports and case studies that I think paint a really fascinating picture, not just about the mechanics of the system, but also some kind of head-scratching controversies around how some companies are managing their tax obligations.
Yeah, it's a complex landscape for sure.
Yeah.
We'll be exploring how those taxes underpin, those vital public services we all rely on. But we'll also be kind of examining the delicate dance between, corporate profits and their tax contributions in Australia.
From everyday shops to those massive multinational giants, we'll see how things work in theory and how they actually play out in the real world. You might start seeing those shopping receipts in a whole new light.
Absolutely. When we talk about the role of taxes in Australia, it's important to remember that they really form the foundation for those essential services, healthcare, education, even defense. These are the pillars of a functioning society, and they're largely funded by the taxes we all pay.
And when we look at the 2022-23 budget, it's pretty clear where a big chunk of that tax revenue goes. Social Security and welfare programs alone accounted for a massive $221.6 billion. Yeah. That's a lot of support for pensioners, people with disabilities, and those facing unemployment.
Indeed. And then you've got health, education, and defense, which received $105.8 billion, $44.8 billion, and $38.3 billion, respectively. These are significant investments, in the well-being and security of the Australian people.
Okay, so tax is the backbone of Australia's social safety net, and everyone benefits from those publicly funded services. But where do businesses fit into this picture? Do they just pay a flat rate based on, how big they are?
It's a bit more nuanced than that. There are two main ways businesses contribute. Firstly, there's the company tax that corporations pay directly on their profits, and then there's the individual income tax paid by, those running smaller businesses that haven't incorporated.
So those are the direct contributions. But I'm curious about the indirect impact of businesses on tax revenue. It seems like their activities have a ripple effect throughout the economy.
You're absolutely right. Think about it. When a business thrives, it creates jobs. Those employees pay income tax, and every transaction from buying supplies to selling products generates additional tax revenue. It's a chain reaction, really amplifying the impact of businesses on the overall tax pool.
So even if a company's direct tax payment seems kind of modest, its overall contribution to the tax system could be much larger when you factor in these indirect effects.
Exactly. It's a bit like an ecosystem. The health of the businesses within it really affects the health of the entire system. But that brings us to a question that's been kind of swirling around for a while now. Are all businesses, especially the big players, truly paying their fair share?
Yes. The age-old question of fair share in taxation. It seems like there's always a debate brewing about whether corporations are contributing enough, especially when we see reports of companies making, billions in profits.
Yeah, it's a hot topic for sure. And we've got some interesting case studies here that really highlight this whole debate. For instance, we have the example of ExxonMobil, which paid a hefty $3.1 billion in federal taxes in 2021. On the surface, that sounds like a substantial contribution.
It certainly does, but I have a feeling there's more to this story.
There is indeed. This significant payment came after a decade during which they didn't pay any company income tax at all, despite generating billions of dollars in Australia year after year.
A whole decade with no company income tax. How is that even possible when they're raking in billions?
That's the million-dollar question, isn't it? And ExxonMobil isn't an isolated case. Sydney Airport, for example, paid no tax on over $1.5 billion in revenue. Then you have Lend-Lease with a staggering $9.5 billion in income, of which only $69.2 million was deemed taxable. And Transurban reported $2.9 billion in income with only $112.1 million considered taxable. Neither of them paid any income tax.
Whoa, those are some big names and even bigger sums of money. It sounds like they're operating within the law.
Yeah.
But it definitely raises questions about whether it's, truly fair.
Precisely. These cases often lead to, protracted legal battles with the Australian Taxation Office as they try to determine whether companies are kind of pushing the boundaries of what's permissible.
It makes sense that these disputes can get pretty complicated. The Australian tax system isn't exactly known for its simplicity, is it?
You're absolutely right. It's a complex web of regulations and deductions designed to ensure fairness, but it also creates opportunities for, savvy accountants to minimize their clients' tax liabilities.
I guess that's why tax lawyers and accountants are in such high demand. But for those of us who aren't tax experts, can you break down how these deductions work in practice?
Sure. Let's imagine a business that imports and sells high-end coffee machines. They might sell a machine for, let's say, $5,000, but that doesn't mean they pocket the entire amount as profit.
Right. They have to cover the costs of importing, storing, marketing, and selling the machine.
Exactly. They also have to factor in things like rent for their warehouse employee salaries, insurance, and a whole host of other operating expenses. The Australian tax system recognizes this and allows businesses to deduct these, legitimate business expenses from their total income. They only pay tax on the profit they actually make, not the entire revenue.
So it's all about determining the true profit, not just looking at the top-line revenue figure.
Precisely. The idea is to create a level playing field and ensure businesses aren't unfairly taxed on the money they spend simply to operate. But as you can imagine with the system, this intricate things can get pretty murky.
Especially when you start talking about multinational corporations that operate in multiple countries with different tax laws. That seems like a recipe for complexity.
You're spot on. Taxing multinational corporations presents a unique set of challenges, primarily because of their ability to shift profits to countries with lower tax rates.
So a company could potentially make a killing in Australia, but declare its profits in a country with a much lower tax rate, effectively shrinking its Australian tax bill.
That's the essence of it. And this is where the debate gets really interesting, blurring the lines between, legal tax minimization strategies and potentially unethical tax avoidance schemes.
Our sources mentioned a Chevron case and something called the Panama Papers. Are these examples of these blurry lines?
Absolutely. In 2017, Chevron lost a major appeal to the full federal court over a $340 million tax bill. It was a landmark case, the biggest tax dispute in Australian history, and it really highlighted the intricacies and potential pitfalls of taxing these multinational corporations.
So even a giant like Chevron tries to find ways to, minimize its tax burden.
It's more common than you might think. And then there's the Panama Papers leak back in 2016, which exposed how wealthy individuals and multinational corporations were using offshore investments to avoid paying what some considered their fair share of taxes in countries like Australia.
That sounds like something straight out of a spy thriller.
It was a massive scandal that lifted the veil on the shadowy world of offshore tax havens and sparked a global conversation about tax fairness.
It seems like there's a fine line between legally minimizing your taxes and engaging in potentially unethical or illegal tax avoidance.
Indeed. And it's a line that large corporations often walk very carefully, employing teams of lawyers and accountants to ensure they stay on the right side of it. But it begs the question, how do we ensure a system where everyone contributes their fair share while also fostering a thriving business environment?
That's a great question. It's a complex issue with no easy answers, and it's a discussion that's likely to continue for a long time to come.
Absolutely. And that's why it's so important to delve into these issues and understand the complexities involved.
It feels like we've only just scratched the surface here. There's so much to unpack when it comes to the interplay between business taxes and, the overall well-being of Australia.
It's a multifaceted issue, that's for sure. And one of the key points to consider is that, the profits generated by these multinational companies don't always stay within Australia's borders.
What do you mean? I thought if a company makes money here in Australia, that money stays in Australia.
Well, it's not always that straightforward. Many multinational corporations have shareholders who live overseas. So when those companies distribute profits as dividends, a significant portion of that money can flow out of Australia.
So even though the profits were initially generated in Australia, they might end up benefiting individuals and economies in other countries.
Exactly. And this adds another layer to the debate about whether multinational corporations are truly contributing their fair share to the Australian economy. Some argue that if profits are being siphoned off to overseas investors, it kind of weakens the case for those tax books and incentives that are aimed at attracting those companies in the first place.
It sounds like there are valid points on both sides of this debate. On the one hand, businesses create jobs, stimulate economic activity, and contribute to tax revenue through various channels. But on the other hand, there are concerns about large corporations, potentially exploiting loopholes and minimizing their tax contributions, particularly when those profits end up flowing overseas.
You've hit the nail on the head. There's no easy answer. And it often boils down to differing perspectives on what constitutes a fair share. Some people believe that as long as companies operate within the letter of the law, they're fulfilling their obligations. Others argue that a truly fair system requires companies to contribute in a way that aligns with, their economic impact and the benefits they derive from operating in Australia.
So what are some potential solutions or changes to the tax system that people are proposing to address these concerns?
Well, there are a number of ideas being floated around. Some advocate for revising the existing tax laws to kind of close those loopholes and make it more difficult for companies to shift profits to those low tax jurisdictions. This could involve stricter regulations on multinational corporations and, increased transparency requirements for their financial reporting.
More transparency could definitely shed light on how these companies are managing their tax affairs and whether they're truly paying their fair share in each country where they operate.
Exactly. Another idea gaining traction is a more progressive tax system where higher earners and highly profitable corporations contribute a larger percentage of their income in taxes. The rationale is that those who benefit most from the system should also contribute more to, its upkeep and funding.
That sounds like a fair approach, on the surface. But wouldn't that discourage businesses from growing and expanding if they know they'll face a steeper tax burden as they become more successful?
That's a valid concern, and it's a point often raised by critics of progressive taxation. They argue that it can stifle economic growth by disincentivizing businesses from, striving for higher profits. Proponents of progressive taxation, however, counter that it promotes a more equitable society and ensures that the burden of funding essential services is distributed more fairly.
So it's a balancing act, really, trying to find a system that encourages economic growth while also ensuring a fair and sustainable contribution from those who benefit most from it.
Precisely. And then there's the concept of a global minimum corporate tax rate, which has been gaining momentum in recent years. The idea is to level the playing field internationally and prevent a race to the bottom, where countries constantly lower their tax rates to attract multinational corporations.
That sounds like a bold and ambitious idea. A global minimum tax rate could potentially put an end to profit shifting and ensure that companies are making a fair contribution globally, regardless of where they choose to declare their profits.
It's certainly a complex proposal with a lot of moving parts. There would need to be a high level of international cooperation to implement and enforce such a system. However, the fact that it's being seriously discussed at international forums like the G20 and the OECD demonstrates the growing recognition that multinational tax avoidance is a significant problem that needs to be addressed.
It seems like the key takeaway here is that the relationship between businesses' taxes and the well-being of society is far more intricate than it might appear at first glance.
Absolutely. It's a topic that demands careful consideration and informed debate. There are no easy answers, and any changes to the tax system need to be approached thoughtfully and with an understanding of the potential consequences, both positive and negative.
So where does this leave us? It feels like we've uncovered more questions than answers.
That's the beauty of a deep dive. It's about exploring those nuances, challenging assumptions, and sparking, meaningful conversations. We've peeled back the layers and revealed the complexities of a seemingly straightforward issue. Now it's up to each of us to continue engaging with these ideas, forming our own conclusions, and contributing to the ongoing dialogue about how to create a fairer and more sustainable tax system.
You've given us a lot to ponder, that's for sure. What's the most important thing for listeners to keep in mind as they navigate this complex world of business taxes?
Yeah, it really is a lot to wrap our heads around. What's the key takeaway, for our listeners as they try to make sense of this complex landscape? Well, I think the most important thing is to kind of recognize that, understanding the complexities of the tax system is crucial, for participating in these discussions about economic fairness and government spending. We can't just blindly accept things at face value. We need to dig deeper, ask those questions, and understand the nuances of how the system works.
So it's about being informed and engaged citizens, not just, passive consumers.
Exactly. The next time you buy something, take a moment to think about the journey of that dollar. It goes from your wallet to the business, and ultimately a portion of it contributes to those public services we all rely on.
Yeah, it's easy to forget about that connection when we're just swiping our cards or tapping our phones these days.
Indeed, it's a hidden web of connections that we rarely stop to think about. But, understanding these connections can give us a deeper appreciation for the role that businesses and taxes play in, shaping our society.
Well, this deep dive has certainly opened my eyes to the intricacies of this system. So where do we go from here? What does the future hold for the Australian tax system? Are we headed for a major overhaul, or will things continue to evolve kind of gradually?
That's a tough question to answer definitively. There are a lot of factors at play, including political will, economic conditions, and those global trends. But one thing is for sure, As awareness of these issues grows and the debate about tax fairness intensifies, we can expect to see, ongoing efforts to refine and adapt the system.
Perhaps we'll even see that global minimum corporate tax rate become a reality one day.
It's certainly a possibility. The world is becoming increasingly interconnected, and, tax policies are evolving to reflect that reality. Countries are realizing that they can't operate in isolation when it comes to taxation, especially with the rise of, digital economies and multinational corporations that transcend national borders.
Well, folks, there you have it. A deep dive into the fascinating world of Australian businesses and their impact on the economy through the lens of taxes.
We've explored the fundamental role that taxes play in funding essential services, the contributions of businesses both directly and indirectly, and that ongoing debate about fairness, tax avoidance, and, potential solutions.
We've seen that this isn't a black and white issue. There are valid arguments on all sides,
Yeah.
and it's a topic that requires, ongoing discussion, critical thinking, and a willingness to engage with different perspectives.
As always, we encourage you to continue exploring these ideas and forming your own informed opinions. Stay curious, stay engaged, and keep asking those tough questions.
And remember, the next time you're at the checkout counter, take a moment to appreciate the complex journey of your hard-earned dollars and the role they play in shaping Australian society. It's a fascinating web of connections, and understanding it can empower you to be a more informed and engaged citizen.
Until next time, keep diving deep.